Henry Toad joins us from Dallas. He's a partner and chief investment officer at CB Capital Partners. Henry, thanks so much for joining us. So approximately 6.5% growth. Does the word approximately give some wiggle room? And what are some of the areas of growth potential that you see?
Thank you for having me today, Elaine. So 6.5% growth, I think, is a very pragmatic target because, as you pointed out, that there needs to be a lot of reforms, not just within the financial sector, but also within the environment, renewable energy, and so forth. So the target industries that I would be looking into to invest, because they're still growing at close to double digits, so maybe high nines and 10.0%, would be the Chinese consumer. The Chinese consumers that are born in the 1980s, who actually have the biggest piece of the spending pie and also the disposable income pie. So anything that would be attractive to them, for example, branded apparel, jewelry, and online retail, and so forth.
So we're looking at millennials there. How important is foreign direct investment in China's economic growth? And is there concern with growing protectionism, especially here in the United States, with the Trump administration?
I think there is. I think to answer your second question first, I think there is a lot of protectionism fears. When you look at the bilateral trade between China and the U.S., about $600 billion of goods and services trade hands between China and the U.S. each year. So if that number comes down, then that has a major effect on global trade, not just within the U.S. and China, but also within Asia and the Americas as well. Now, FDI is also very important because that's directly related to the Made in China 2025 initiative, where China is expected to continue to build up its manufacturing sector, but also to move to next generation manufacturing using big data analytics to improve the manufacturing process. So there needs to be a lot of money and also know-how to be invested into that sector through FDI.
Well, U.S. direct investment in China now exceeds $74 billion per year. What do U.S. investors like about doing business in China?
So I think right now there's still a wait-and-see approach because, number one, not trade protectionism, as you mentioned, there hasn't been a big focus on that recently in the last few weeks, but we know that that issue is going to come back, especially if the RMB weaken in the second quarter or the third quarter of this year. The second thing is that the automation process here in the U.S. is beginning to get to a point where it's actually cheaper now to manufacture certain things here in the U.S. versus China, and even Chinese firms are moving some of their manufacturing to the U.S. in states like Arkansas, North Carolina, in order to sell to the local market. So I think there's a wait-and-see approach, especially when it comes to intellectual property protection rights.
Well, let's look around the world. China, of course, is continuing to push its Belt and Road Initiative. What is your outlook for that and global business this year?
The One Belt, One Road initiative, I'm very optimistic on it, although I know it's very challenging because of the sheer size, the scale of the investments that are required to lift up the entire region that will be affected. And when you include China in that region, you're talking about 60% of the world's population with, a dozen, 20 countries in that region. So, but I think it's very important because you're seeing traditional sources of growth for China, the three pillars I call it, they're starting to weaken, going back to the World Trade Organization induction in 2001. And one of them is the traditional export markets for China is starting to close off. And so for China to be able to build up its capacity, to also increase its export market, they need to lift up the entire region in Central Asia. And the One Belt, One Road initiative is the perfect way to do that.
All right, Henry Toad, CB Capital Partners, thanks for joining us from Dallas.